Hey everyone, it's Carlos with your May 2026 real estate market update. This month we're talking about three major topics that are affecting buyers and sellers right now: mortgage rates, home pricing, foreclosures, and what's really happening. There's a lot of noise in the media, so today I want to give you the facts and explain what all of this actually means for you. Start with mortgage rates because this is probably the number one topic people ask about right now. A lot of buyers are waiting for rates to drop dramatically, maybe back into the 3% range. But realistically, that's probably not happening anytime soon. Here's something important. Even with everything happening in the economy, rates today are still lower than they were during the last three spring buying seasons. That's helping buyer activity slowly come back into the market. Mortgage rates have moved around a bit recently, especially because of global uncertainty and inflation concerns. But compared to where we were last year, buyers are actually in a better position today. Put this into real world terms. If someone borrowed 400,000 last year, their payment will have been around 2,731 per month. Today, that same loan is closer to 2,534. That's nearly $200 per month less. And this is something buyers really need to understand. Even if rates dip back into the high 5% range, the payment difference is only about 138 more savings per month compared to today. That's helpful, but it's not life changing. So waiting forever for the perfect rate may not make sense. Although I don't have a crystal ball, let's go over some projections by experts. Most experts are forecasting rates to stay fairly stable over the next year, probably somewhere in the low to mid 6% range. Not huge drops, no huge spikes, more stability. So the expectation right now is more predictable mortgage environment. That's good news for both buyers and sellers because stability creates confidence. Bottom line, mortgage rates probably aren't changing dramatically anytime soon. And that means buyers and sellers should focus less on trying to perfectly time the market and more on making smart long-term decisions. Let's talk about sellers because pricing strategy has become one of the biggest issues in today's market. Most homeowners still believe they are going to get full asking price or even more. And honestly, that mindset comes from what happened during the pandemic market. In fact, about 80% of sellers expect to get their asking price or higher. But today's market is very different than 2021 or 2022. Here's the reality. More homes are now selling below asking price than they have in years. That doesn't mean the market is bad. It means the market is normalizing. Today's buyers are very price sensitive. If a home is priced correctly, it gets attention quickly. If it is overpriced, buyers move on. We're also seeing more sellers reduce their prices after listing. That's usually because the home was overpriced from the beginning. The longer a home sits on the market, the bigger the price reductions usually become. A home listed at 400,000 that sells quickly might sell around 380,000. But if it sits on the market too long, it could eventually sell closer to 345,000. That's why pricing correctly upfront matters so much. Today's buyers watch everything online. They see price cuts, they see how long homes sit, and once a home starts looking stale, buyers begin wondering what's wrong with it, even if the only issue was pricing. Now let's talk about foreclosures, because this is another area where headlines can create fear. Yes, foreclosure activity is increasing. That part is true. It is nowhere close to the housing crash we saw in 2008, not even remotely. Financial pressure may be building for some homeowners and could signal shifting housing market dynamics. A lot of people are feeling financial pressure right now because of higher costs, inflation, and the overall economy. That part is very real. The homeowners are prioritizing their mortgage payments more than almost any other debt. People may fall behind on credit cards or car loans before they risk losing their home. Mortgage delinquency levels are still historically low compared to past housing crises. We are seeing more people searching for mortgage assistance online. That tells us people are feeling pressure, but also looking for solutions early in the process. Also important, foreclosures don't happen overnight. The average foreclosure process currently takes well over a year. And this is probably the biggest difference between today and 2008. Most homeowners have substantial equity in their homes. Over half of homeowners still have mortgage rates below 4%. That's a huge reason why many people are staying put and protecting their homes. And nearly two-thirds of homeowners either own their home outright or have at least 50% equity. That's a very strong housing market foundation. So here's the bottom line for May 2026. Mortgage rates are more stable than people think. Buyers are adjusting to today's market. Sellers need realistic pricing strategies. Foreclosures are rising slightly, but this is not 2008. Homeowners today are in a much stronger financial position overall. Keep in mind that the statistics I went over today are at the national level. If you're thinking about buying, selling, or just trying to understand what all this means for our local market, I'll be happy to help. You can call me directly at 571-748-7360, and we can go over your questions, your concerns, and your goals. Thanks for watching, and I'll see you next month.